Despite huge losses, layoffs, and cash burn due to the crash last year, airline stocks present a solid investment opportunity for those who are willing to wait for the inevitable rebound of the travel industry. Year 2020 was one of the worst periods of the airline industry. As the stock market crashed, the travel industry was the most affected sector. However, with the big recovery, analysts believe that the industry will see a revival in 2021. Major airline stocks will continue to see the negative effects due to a crash in the coming months, which present a solid investment opportunity for long-term investors. Hey, what's up guys? Welcome to Investors Game. In this video, we're gonna be talking about, are airline stocks really a buy right now? And if you guys wanna see any more investing tips, stocks, method, and strategy from me in the future, be sure to subscribe down below. Turn on my post notifications so you never miss another upload. Now, let's jump right into the video. The airline industry recently breathed a sigh of relief after the Congress approved the $900 billion stimulus package, which includes the payroll support programs for the airline companies. The program allocates $15 billion for the airline companies to bring back furloughed workers. The airline industry plays a key role in the economy. The passenger air transport was down 90% year-on-year in April 2020 and down 17% in August. By the end of 2020, job losses in the airline industry are expected to reach 90,000, including more than 30,000 furloughs. All major airlines, including United Airlines, American, Southwest, and Delta, have cut jobs due to the crisis and warn of further downsizing and harsh measures in the coming months. According to data from Airlines for America, the industry's workforce in the fourth quarter will fall about 370,000 full-time equivalent jobs, down from 460,000 jobs in March. But how risky are airline stocks? Airline stocks are always tricky, mainly to the volatility nature of the industry and low margins. However, US airlines companies show consistent growth over the past 10 years before the crash hit. Unlike in Europe, this growth was possible in the US because of mergers, collaboration, and partnership between big airlines companies. Airline stock performed so well that legendary investor Warren Buffett, who famously used to scorn airline stock, took a U-turn and brought millions of airline stock back in 2016. Warren Buffett, however, sold all of his airline stake in 2020. In fact, the Dow Jones US Airlines Index is up over 24% over the last 3 months, but is still down 32% year to date. All major airline stocks in the US are down year to date. American Airlines minus 46%, Southwest minus 17%, United Airlines minus 52%, and Delta minus 32%. This presents a solid investment opportunity. It's not just the airline industry that is becoming volatile. Business travel, which accounts for over 17% of profits over the travel industry, is also expected to be back to normal in the next 2 to 3 years. In a survey, over 48% experts and business executives say that it will take about 3 years for business travel to get back to normal level. These experts manage daily business activities and travel budgets for major companies worldwide. But what does all of this mean? Well, that's a clear sign that in the next 3 years, the travel industry will be recovering all the damages that the crash left, and don't expect huge returns in the coming months for these companies. Now let's break down each stock of the airline industry. First, Southwest is the most popular airline stock to buy for 2021. Southwest stock is down over 15% year to date. Although Southwest doesn't have any drawbacks, the company's relatively strong balance sheet and loyal customer base could put this airline stock back on track when travel rebounds. Now let's check the annual growth that the stock had. In this graph, we can see that the best year for Southwest Airlines was in the 2017, when the stock was up by 20%. And the worst year for Southwest that, to be honest, it wasn't that bad, when the stock went up just 13%. If you had invested $1,000 in Southwest 10 years ago, how much your investment would have grown by now? We just found the annual return to be 14.26%. Therefore, your investment now will be $3,792. Also, here's an amazing tool that Southwest offers. In this website gives you the overview of the growth of the Southwest Airlines. Here, you can check the total return that had in the last 12 months and the actual year. For example, in these couple of days of the year, the stock is up by 4%. Now, if we scroll down, we found this chart that basically tells you the growth of the stock over the past 15 years, 10 years, 5, and 1 year. As we can see, the best performance of this stock was in the past 10 years, and not even the 15 years. That means not all the stock we can hold them forever. Alright, now check this out. If we go up and click on calculator, we will see something like this. And this is a simple calculator, for example, that it will tell you if you invested $1,000 8 years ago, how much money you have made. Well, let's figure it out. Here we put the date, January 16 of 2013, then the actual date, and finally the amount that it was $1,000. Next, click on calculate. Now we have all of this information. So what we really want to see is the average return on investing that is gonna be right in the corner. The 21% annual return and the total return of 359% during the 8 years. Now, if we scroll all the way down, we are gonna have this information. The total worth of our investment. And during the 8 years with $1,000, you could have made $4,304. But now, why do you have more than $4,000 if your return was of 359%, right? It's because we reinvest the dividend yield that they paid us. With that small percentage that they give, we have made 60% more of it. And remember, if you want to check this website, I'll leave the links in the description box. Next, American Airlines. American Airlines is the world's largest airline by scheduled revenue passengers miles. The airline said on December 23rd that it's moving ahead with plans to recall its furloughed workers. About 8,000 American Miles flights attendants have already received recall letters. In ad, American Airlines revenue in the third quarter fell 73% as the company swung to a net loss of $2.4 billion, compared to $425 million profit a year earlier. Now, let's check the return that you can get if you want to invest in American Airlines. In this chart, we looked the past 9 years, just to have an idea how the stock was performing. Just to have an average, we found that in the past 9 years, the stock has returned 30% annually. We can say that the best year for American Airlines was in 2012, when the stock was up by 164%. And the worst year for this stock was the last year. The price is down by 44%. And in the past 3 years, the stock is down by 91%. This can mean a great opportunity for investors, or a bad sign if you expect huge returns. Next, United Airlines. The company is having a bad time. The stock has lost over 50% in value so far this year. The company expects its revenue to drop by a whopping 70% in the fourth quarter, while an average daily cash burn rate is expected to come in the range of $24 billion to $26 billion, excluding $10 billion of average debt principal and severance payments per day in the quarter. Now, here's what can you expect if you want to invest in United stock. United Airlines has an average return of 11% annually. In this graph, we can see that in the past 5 years, the worst year for United stock was in 2016, when the stock went up by 8%. And the best year for the stock was in 2015, when the stock was up by 25%. As we can see, this stock doesn't offer too much return, as well is one of the most stable airline company. Next, Delta Airlines. Delta stock offers great value to investors. Delta stock has a great 2.6% dividend yield and a buyback yield of 5.1%. This represents a 7.7% total yield for investors. Moreover, based on its latest financial, the company is likely to continue reducing its shares outstanding by over 5% annually. Over the last 5 years, Delta has cut its shares 5.3% annually, and this stock has a 10.3% annually return. I expect that the total return for investors in the next 3 years will be 13% per year. This stems from 2.6% dividend yield and an expected price gain of 10.3% annually. The price target is $83 per share by 2020 year end. However, investing in airline stock in 2021 won't be easier. Airline companies have run up tremendous debt. American Airlines, for instance, negotiated a $5.5 billion Treasury Department term loan facility using the frequent flyer program as collateral. In September, Delta Airlines borrowed $9 billion in the industry's largest sale ever. Other big airlines are still running in debt. Only airlines with strong fundamentals and a strong base will be able to maintain growth when the bills from lenders come in. A lot of factors come into play while evaluating an airline stock, including daily cash burn rate, debt, earnings before debt interest, taxes, depreciation, amortization, and rents paid to lease aircraft. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in any of airline stock? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.